Hi, everybody, and welcome. I'm Leslie with the New Mexico Small Business Development Center, and I'm pleased to introduce everyone to Vic Burnaclaw. He is going to be telling us on implementing the Lean Canvas business plan. So this is part 2 of a 2-part series. Vic presented part 1, and we do have that available pre-recorded on demand and also on our YouTube channel. So if you missed part 1, we do have that available for you. So part 2 is going to be, first part was basically developing the plan. The next part is putting the plan into action. I also want to remind everyone that we are fortunate enough to have Vic for the next couple of weeks. So if you want to visit this one, come back next week and we'll have part 1 again. Next slide, please. I want to remind everyone about our COVID-19 business resources. This is going to be sent to you in a follow-up email with a copy of the presentation today. It has a lot of links for anything COVID-19 business related for you. So don't feel like you have to take a screenshot or write this down. We'll send it over to you. Next slide. This is, again, like I said, Vic Burnaclaw, who's going to be presenting. I hope we have enough time for him to tell you a little bit about his background because he has a rich background in business mentoring. He's also one of our resource partners, SCORE Certified Mentor. I want to remind everyone to set your Zoom ratio to fit window. We're going to use the Q&A. If you have questions anytime throughout the presentation, just type it in the Q&A and we'll pick those up. Next slide. This is also a slide about our webinars that we have available. I'm doing the calendar right now and send it out to everyone, but we have 30 plus webinars on a whole range of topics coming up into September. So take advantage of the no cost ones that are out there for you guys to look through. Vic, I think I've gone through everything.
Great.
All right, turn it over to you.
Thank you, Leslie. And good afternoon, everyone. I'm glad you had the time to sit in on learning a little bit about the Lean business plan and how you can implement it. Specifically, first of all, let me give you just a little bit of my background because I always want to know who's talking. You know, are they talking from some kind of a background? So my background is I have a bachelor's in mechanical engineering and an MBA, Master's in Business Administration. And over 40 years of business experience. I started a couple of businesses with my wife and son. We got them up to about 30 employees, couple million in annual sales. Turned those businesses over to our son, and he's doing very well with them and just working away. In the meantime, what I've done in retirement is joined an organization called SCORE, a national nonprofit that with about 10,000 volunteers, nobody gets paid, we're all volunteers, helping people with, like you, start a business or with any business issues. So we are working very closely with SBDC, and we're here to help you for the success of your business. Let's get on with what we're going to talk about. First of all, we need to make sure that you recognize that you have already worked the Lean business plan, because if you haven't, be sure you take the time to go back and start filling in those 13 blocks, because that is the one-page business plan that will help you toward a successful business. You wouldn't plan to go somewhere without, just, for example, I'm going to Las Vegas. You wouldn't just jump in the car and go some direction. You would know where you're going. You might have to think about having some money in your pocket. Where am I going to stay, et cetera. Same way with your business. You want to have a business plan, it's overbearing, not a lot of work, but one that allows you to put your ideas and thoughts and information down quickly and be able to change it quickly. So let's make sure that we talk about the operating aspects in that business plan. If you remember, this was that business plan with its 13 blocks. We talked about that last time. We're going to talk about, okay, now I've got this filled out. Now what do I do? Well, the second thing you need to do is to think about, what else do I have that's other than operational? Well, other than operational is you have to create an administrative platform. In other words, there's a lot of details in starting a business or expanding a business, that's an administrative in nature. Now, the operating is, to me, still the most critical. You have to have a business idea that people want to pay for because it solves their problem. So the focus over and over, you're going to hear this over and over, probably ad nauseum, is focus on the customer's problem, solve that problem, and then make enough money from that that you get more in than going out. And we're going to be talking a lot about finances as well. There's a whole bunch of things in this platform that we're going to talk about. Everything from what kind of a name should I have for my business? What kind of an organizational type? Should I be a sole proprietor, an LLC, or a subchapter S, or a C Corp? We'll talk about that. We're going to talk about business administration. There's a lot of aspects of business administration in terms of running a business, everything from registration to taxes to payroll, everything of that sort. So we're going to talk about a lot of those things. We're going to talk about the financial aspects in terms of planning, record keeping, taxes. So let's get on right away with the name. You can pick out a name that is either descriptive or general. What do you mean by that? Well, the specifically, the general is things that are a name like Amazon, Google, Xfinity, Etsy. What do those things mean? If you hadn't the image in your mind and you had heard about it in the first time, you would think that Amazon is a river in South America. And so until they have branded themselves in your mind of what Amazon is. The advantages of a general is that it gives you flexibility in terms of what you're going to do. So for example, Amazon, if you remember, Bezos started out with books. Jeff Bezos says, we need to market books on a national basis. So he could have called himself National Book Distributors or something like that, but that would have limited what he was doing. So Amazon then after that got into all sorts of stuff, but kept the same name. The disadvantage is that with a general is that they have to spend a lot of money to brand that in the minds of the customers. So they do that over and over and over with lots of money until you know what Amazon is, or you know what Etsy is, or Xfinity, or Google. You know that because they've spent a lot of money. If you don't have a lot of money to do that branding, you can use a descriptive name. A descriptive would be things like MasterCharge, Roto-Rooter, or one of the companies we started with, Home Security Systems. Those describe exactly what you're doing. So the advantage of a descriptive is that you know right away, you don't have to spend a lot of money. They know right away what it is that you're doing, but there's disadvantages. The disadvantage is that you're kind of hooked into that particular aspect. So let me give you a story. We started out with a company called Home Security Systems. We went out and did security for homes. This is 40 years ago when the security in homes was not all that common, only in the high-end homes. And we were very successful, and the people were very happy. And they said, "You've done our house, now wonderful. Now come down and do our business." Well, no business wants to have a sticker on their window that says home security because they're a business. So we had to start a second company called Industrial and Commercial Security. It was, again, another descriptive, but it was for that particular set of clientele. So there's advantages and disadvantages of both a general and a descriptive, and you need to make the selection of what's most important to you. You want to make sure that no one else is using that name, and we're going to talk about that by when you go to get, for example, if you got an LLC or subchapter S, you're going to go to the state, Secretary of State, and look up whether anybody's using that name. And the way to do that is just to go online and just say, I want to look up whatever your name is, ABC Company. And they come back and they say, there is no such company. Well, then you know that you can go ahead and use that. So unless you're going to go in a national business, if you're going to go in a national business, then you need to do a lot more research outside of this state. But if you're starting small and you're just going to stay in the state primary, look at the state Secretary of State's area under what used to be Corporation Commission, but is now the corporation certificates. Organizational type, there's a lot of ways you can go in this direction. Easiest way is to go as a sole proprietor. A sole proprietor is no more than you and the business are one and the same. So you can use your social security number for record keeping purposes for taxes, and that's all fine and dandy. The advantages is simplicity, immediacy. The disadvantage is that if you had something that somebody could sue you for, and the judge agrees and provides a judgment against you, then you are liable not only for your business assets, but also your personal assets. So whether your house, your car, your 401k, all of those are part of you, and you are part of the business, and the business is part of you. Therefore, they're all subject to those judgments. The way around that is to go with something called an LLC. Excuse me, a partnership is no more than a sole proprietor with more than one party. If you're going to go partnership, let me mention that make sure you have a partnership agreement. Partnership agreement is things that are signed by you and whoever number of partners you have, and documented basically on what you're going to do, what you're going to put into it, and what you're going to get out of it, and have that notarized. That agreement then helps you should the two of you have some sort, or more of you have difficulties. It's always easy to get married. It's very difficult to get a divorce. So make sure you have a prenup, in this case, for a business viewpoint of what the partner and you are going to do and how things are going to come out. An alternative for the liability issue is something called limited liability company. Very straightforward. LLCs are relatively recent vintage of 20, 30 years ago, and has ability to limit your liabilities to your business situation. So if you treat the business as a business and do no commingling with your personal funds, and we're going to talk about that, things like having the business having its own checking account, and every dollar that comes into the company and every dollar that goes out goes in and out of that checking account. No commingling of personal funds, and we'll talk a little bit about how you can put your own personal funds into the company to get it started and thereafter. But if you treat the business as a sole business, LLC is the way to go. And we're going to talk about, if you want to go that way, what it takes to do that. Subchapter S is merely a step up in that area. Also has the business liability protection, but they have stock that the LLCs do not have. So you issue stock under a subchapter S, and if you decided you want to sell some of that stock as opposed to borrowing money, sell part of your company to Uncle Joe or whoever, then you can get money into the company by the sale of stocks through a subchapter S. A C corporation is for the big boys. This is the General Motors and the General Electrics that we all know about. Those are all C Corps. So when you get large enough, you want to definitely go C Corp, but that's a whole nother arena. How do you form an LLC in New Mexico? Well, the way to get started is you have to come up with a name. We've already talked about the name, and you can decide on that, but you have to have that before you go. You have to appoint a registered agent. That registered agent can be you. You can be your own registered agent. We're going to talk about that. You have to file articles of organization. Well, you have to do that because in order to get the LLC, we're going to talk about how you go to the state and you get online, and you have to do this online. And you go through a whole series of questions and steps in terms to get your LLC answered. Lots of questions, fill in lots of blank. That is the articles of organization. So when you get done, you have your articles of organization, and you're all set with an LLC. You can prepare an operating agreement, but that is optional. An operating agreement just says how I'm going to run the company. Am I going to have meetings of the owners if there are multiple owners? Am I going to have my year for tax purposes is going to be January 1 to December 31st? No, it's going to be June 30th or whatever it is, your tax year. You can specify that. You can specify how you're going to run the company. You can specify where it's going to be located. You can specify, in the event of my demise, something happens to me, I want the business to do X. I want it to transfer to my spouse, and I want it to transfer to whatever. I want to be just closed up, whatever you want to do, you can specify that in the operating agreement. So the operating agreement is no more than just how you're going to run the company, but that is optional, recommended, but optional. Let's talk about the LLC. In New Mexico, your name, you can end it with limited liability company, LLC, LC, L.C, or L.C. I have a LLC for a small consulting effort that I have. So I always, when I put the name down, I put comma LLC. Make sure that, as we talked about, nobody's using that name. We talked about going to the Secretary of State and checking that out. You can appoint a registered agent. And the reason they have to have that is they have to have in their records at the state level somebody to send the process information to, and it has to be a physical address. It can be a business, either individual or a business entity who will accept the legal papers. You can, if you say, hey, I don't want anybody to know the address I'm using, you can go ahead and hire a registered agent to do that for you, and then they can take care of all the paperwork. But as long as you're willing to get the paperwork at an address, physical address that you're familiar with, either your home, your place of business, or wherever, it cannot be a PO box. It has to be a physical address. It's easy just to be your own registered agent. Most of the people I know are their own registered agents. As I mentioned that, file the articles of organization. That's obviously when you fill out the LLC with the name, the effective date that you're filling it out. If this is perpetual, you can leave it blank. Or if you say, hey, I only want this thing to run for 20 years and then I want to fold up, put that in there if you want. For LLC purposes, you just leave it blank for the purpose if it's a general business purpose. Name and address of you. Again, it could be your home, it could be your business location, or whatever physical address that you want to use. As I mentioned, and the phone number is optional. It's got the address of the principal place of your business. If your mailing address is different, they want to know where you're going to do business. And a lot of people just put down their home address if they're going to operate out of their home. When we started business, our major place was the room I'm giving you from right now. And our inventory room is the closet behind me. So that's where we started out. And then we started moving into larger and larger spaces and finally ended up buying a 7,000 square foot building, which the business is still currently located in. You have to indicate whether the LLC is going to be run by a manager or by you or one of the members of the LLC. And you have to tell who the members are, that is the owners in a sense, of the business when you fill out the organization, articles of organization. Whether there's only one member or more, and the info on who the organizer is. And it has to be done online, as I mentioned, and you have to have provide them a filing fee of $50. Typically, people use a credit card. If you say, I don't want to use a credit card, then you have to make previous arrangements and provide them a check, cashier's check ahead of time so that they have that in hand. They won't give you this LLC on the come that you'll pay someday. No, they want their money upfront. Operating agreement. I mentioned that was optional, not required in New Mexico, but advisable. And as I mentioned, it's an internal document, how you're going to run the LLC. And if it's created, it does not need to be filed with the state. You just keep it in your own files. You can go online for an LLC to the New Mexico Secretary of State and then use this particular website location. You don't have to worry about copying this down because you will be provided copies of all of these slides and you'll be able to pick up all that information in slides that you're provided. A lot of business administration in a company, a lot of administrative things. Number one that I mentioned, very, very important. Establish a checking account, but don't establish a checking account until you clearly have an approved name for the business. If you're going to start it as a sole proprietor, it's still advisable to check with the state to make sure nobody's using that name, because if you use a name that's already used, they're going to come back and sue you to drop that name and possibly damages for any damages that they think you incurred by use of their name. So make sure that you don't have that name. And if you go LLC, you won't be able to get it if anybody else already has that. So just check with the Secretary of State and ask for that particular business, and they'll tell you whether it exists or not. Once you have that name approved from the Secretary of State, for example, for an LLC or cleared as a sole proprietor, establish a checking account in the name of the business. And we'll talk a little later on in terms of putting some money into that account, but every dollar that comes into the business and every dollar that goes out of the business should be run through that checking account. If you commingle some personal money, so for example, says, hey, the company's a little bit short, so I'm going to put $20 in, or I'm going to lunch, so I'll take $20 out. That's commingling personal funds, and it's what's called piercing the corporate veil. And anytime you do that and somebody sues you, all they have to do is say, hey, that person did not treat that business as a business. They treated it as an extension of themselves. Therefore, we get to sue not only the business, but we get to sue the individual. They've pierced the corporate veil, and they're going to come back on your personal assets. So that's one of the advantages in making sure you treat the business purely as a business. Have a website. People say, well, I don't have time enough for a website. It's easy to go get a freebie one-pager so that people know that you're not a fly-by-night. It's hard to believe, but there are a large number of business startups that do not have websites. And a customer will go try and find their website and they don't exist. And they say, obviously, this must be a fly-by-night kind of operation. I'm not going to do business with it. So think about at least doing that. You say, well, wait a minute, it costs too much. You can go to several different free website generators. Wix, W-I-X is one, and there are many others. And then you can generate a one-pager. Once you start generating multiple landing pages, then it'll cost you a little bit. But there are ways that you can come to your counselor, to your mentor, and get information on generating that website on your own, and at least a one-pager so people know you're not a fly-by-night and they know what it is that you do. You want to have some business cards made up? You can do that online pretty inexpensively, or if you want a little better stock, etc., you can get it printed locally. Suggestion to consider, not mandatory, but suggest you consider a trifold or something like that, a pamphlet. A trifold is no more than a piece of paper that's folded in 3 pieces. And you can go ahead and generate the information on your company on that trifold, including how they can reach you, how they can contact you. So it shows your name of the business, what you do, what's been successful for you, what are some of the details on the company, how you operate, and then how to get a hold of you. If you leave that, when you make calls, business calls, you can leave your business card, sure. But if you leave a trifold, that gives them a little bit more about what it is that you are doing. Insurance. I have a personal philosophy is you get insurance only for those things that you personally cannot afford to withstand alone. If you can afford to withstand a particular insurance level on your own, then don't pay for it. That's the concept that has a deductible. Most insurances have some form of deductible. So if you, for example, say I've got a $500 deductible, that means that I can afford $500, but I can't afford over that. So you only buy insurance for over $500 or $1,000 or whatever it is that you can afford, that you can't afford, then you want to buy insurance for. There are some things that are mandatory insurances, and there are some things that are optional insurances. The mandatory insurance is things like a workman's comp. Workman's comp insurance, if you have 3 or more employees in a business, or if you're in construction, it's 1 or more employees. So that you can get, talk to your insurance agent. If you're going to have 3 or more employees other than construction, 1 employee if in construction, and you can exempt yourself, you have to pay for workman's comp. Workman's comp is no more than paying for an employee who is hurt on the job, and therefore you're covering that with insurance. That's mandatory. The optional is things that says, wait a minute, I need some liability insurance, or I don't need liability insurance. One of the things when we started our businesses, we opted to only buy liability insurance for things that somebody might sue us in the event we've caused them some damage or some issue or problem that they could sue us for. And we've obviously maintained a liability insurance. And there are various forms. So talk to your insurance agent in terms of general liability or specific liability. Depends upon the kind of business that you're in. Pricing. You can price your products in a number of different ways. You could say, hey, it costs me $1 and therefore I'm going to sell it for $2. That's 100% markup. So that is just purely a cost plus kind of an arrangement. A lot of people will end up doing that. The problem is you don't know exactly how much to mark it up because your competitors may be only marking it up 50%. So it costs them $1 and they sell it for $1.50. If you're selling it for $2, most customers are going to say, well, why should I pay you $2 when I can go over here and pay it for $1.50? You either have to have a good reason in terms of, wait a minute, mine's available right now and theirs is not, or mine's higher quality than theirs, or mine is, I'll deliver it and they won't, whatever it is. You may have a reason for charging $2 and they're only $1.50. And the people may say, hey, that's worth it to pay that extra to take it. Fine. Another way of pricing is on comparables. As I mentioned, what is your competitor's pricing it at? If they're pricing at $1.50, you can decide whether I'm going to only charge $1.60, or I'm going to charge $1.45, or whatever it is. Be careful about trying to undercut your competition on price because you may end up not having enough money to cover all of your costs and your overhead. We're going to be talking about that later in terms of the financial aspects of making sure you have enough money to keep going. A third way is value provided. In other words, I mentioned a little bit about that and says, I'm providing a value to you that either nobody else can provide, or my value is so great that I can do things for you that nobody else can do. Therefore, my value is greater. Therefore, my price is twice as much as theirs, or whatever it is. And you can explain that extra value. There's nothing wrong with that. When we were in business, we were never the cheapest solution for people. And we told them when we went in, we're not the cheapest, but we're one of the best values. And here's our values proposition. Here's our values statement. Here's what our values are for you, not for me, but for you, the customer, that provides you additional values. And therefore, our pricing is according. The last one on pricing is whatever the market will bear. And you've seen that, when COVID masks were hard to get, people were online selling COVID masks for 10 times what they paid for them. And people were buying them because they had to have them. So if you go that way and charge whatever the market will bear, people remember that. And when they come back later on, when the crisis is over, you probably got your price way down there, but they'll say, that outfit there was trying to scam me and rip me off. I'm not about to go back to them. So sometimes getting whatever the market will bear can be damaging for your future. License and permits. Every company needs to look at whether I need a license or a permit. A lot of companies do not need licenses and permits of a specific nature. If you're in construction, you have to have a construction contractor's license before you can even get started. There's something called a handyman license, but it is limited. And that's just before you even get started. Then if you go out to build something or modify something, you have to get a permit from the local zoning authority or construction authority to do that. If you're a beautician, you need a license. If you're obviously in the medical profession, you need a license. But there are other things that you don't need the licenses, but you will need things like, for example, a city business license, pretty inexpensive, to operate a business within the city or community that you're going. So just get online, put your industry in there that you're trying to get, and research whether you need business or permits, because all of those are very unique to the particular business type of business you're going to operate. If you have any questions, make sure you talk to your counselor or mentor on that. Taxes, the bugaboo of lots of people. What you can do there is, first of all, you got to register for your taxes. Specifically, your federal taxes, you're going to get something called an EIN number. If you are a sole proprietor and you have no employees, you can get away without an EIN number and use your Social Security number. The recommendation is get your EIN number early on. That becomes, in a sense, your license plate that the federals know who you are and your particular business. It's called an employer identification number. So if you're not an employer, you don't need it, but it's free. All you do is just go to irs.gov, you register it, and then you use that on all of your communications with the federal government as far as taxes. The state has the same kind of an arrangement. It's called a New Mexico Business Tax Identification Number. It up until July 1st of this year, it was called a CRS number, Combined Resources number. They did away with that, and they've gone to the BTIN as a number. Again, free. All you do is you go on and get that from tax.newmexico.gov. Payroll taxes, if you consider yourself a W-2 employee, and there's advantages and disadvantages to that, or you have any employees, you have to pay payroll taxes. That payroll tax turns out to be about 15.3% of the person's payment, that their gross payroll. And half of that is paid by the individual and half is paid by the company. And I think most of you are familiar with this because as an employee, wherever you worked, you ended up paying half your Social Security and Medicare, and the company paid half. If you're self-employed, you get to pay both halves of that. So that's a payroll tax that is mandatory that you're going to have to pay if you're a W-2. If you're not W-2ing yourself, then you say, wait a minute, I'm just a business owner. I'm not going to have to pay that because I'm not. Now, the disadvantage is you could have been covered by Social Security later on or work toward a Social Security for retirement or Medicare. Those are not available to you if you decide, hey, I'm not a W-2. So there's advantages and disadvantages to every single thing. The unemployment is not an optional, it's a mandatory type of thing that you have to pay into. The federal side of that, which is very, very inexpensive. It's only the 0.6% on the first 7,000. So it turns out to be about $42 a year, federal side. And that's the federal unemployment tax, or FUTA. There's also, and that's on tax and Form 940. There's also a state unemployment, and that's more expensive. And that's Form on 941. And you'll end up paying that dependent upon your your employment records. So when you first start out, you're going to pay the maximum rate on that, which is maybe as high as 5.4% on your W-2 employees. But once you establish a record that says, hey, I haven't laid anybody off, and nobody's made any claims, that number drops way down. And as you fire people and they make claims against the unemployment, it goes up. And as you don't have any claims against it, it goes down. So it's a pot of money that the state and Fed supplemented. That's why a little bit of money goes to the Feds. The state pays for people who have been laid off to keep going. And there have been a lot of information in the newspapers about that. The Feds have supplemented the state's unemployment because of COVID a couple different times to the tune of a few $100 million. So that's a ongoing pot of money to pay for people who are unemployed. Payments. The federal tax and the state tax money, you'll pay that in various increments. Specifically, the Feds, when you're a small company, you pay that at the end of the year. And it's only paid on the profits. So if you have no profits, you're not going to have any federal income taxes or even any state income taxes. But if you have any profits, then you will pay into that. And the payment frequency is based on how much money you make. If you made a fair amount of money in profits, you're going to have to pay that quarterly because they want their money. They don't want to wait till the end of the year. The state uses a guideline of if you owe me $400 at the end, more than $400 at the end of the year, you should have been paying me quarterly, and therefore I'm going to fine you and charge you interest because you should have given me that money as we're going along. So if it looks like you're going to make a lot of profit, talk to your accountant, and the accountant will set you up for quarterly tax payments, both to the Fed and to the state. State is the one that's much tougher. That's on the income taxes. There is this thing called a gross receipts tax. A gross receipts tax in this state is no more than the moniker for a sales tax. They don't want to call it a sales tax. The reason for that is they could care less whether you charge a sales tax or not. You're going to pay it. So specifically, if you had a sale for $100 and you didn't charge any gross receipts tax on that, the state is going to say, fine, you pay the gross receipts tax to me. And you have to take that out of that $100 and pay them the gross receipts tax. As of 1 July of this year, the gross receipts tax basis, and the state will give you several pages of all of the communities and their tax rates. You have to charge the tax rate of the community you delivered the product or service to. So for example, if you deliver the service in Albuquerque or the product in Albuquerque, you only charge the Albuquerque rates. But if you say, well, I delivered the product in Los Lunas or Corrales or Santa Fe, you have to look on that sheet and find out what the tax rate for that particular community is. And then when you revert the tax information and the money to the state, and the state, when you get your tax number, will try to push you to do that monthly. And you can say, I'm a little guy, so I can do it quarterly, and they'll usually agree to that. Or in my case, I have so little for a little consulting operation I do it every 6 months. So they will allow you to do that based on your level. But if your level goes up, they want it frequently. And when we were in business, we had enough money coming in that we had to revert that almost like on a weekly basis. So they want their money. So you have to revert that gross receipts tax on their form. And again, work with your accountant on that. And you can go to newmexicotax.gov and you can get more information on that if you want. There is also local property taxes. If you own property, or that by property, I'm talking either real estate or equipment, the local county will want to tax you for that. And I'm sure if you own a house, you've seen that tax bill twice a year that you pay. No different in a business. They're going to say, if you own the business, I want you to pay that. If you're leasing the business, whoever you leased it from has to pay that property tax. But if you own equipment, they're going to say, fine, I want a property tax on the equipment that you own. So that's another tax to pay. The B10, as I've mentioned, is an identifier for your taxes, in particular gross receipts tax. And you have to have a B10 number if you're doing business in New Mexico. As I mentioned, the seller pays for that. And you can get that at tax.newmexico.gov. And it's easy to register for it. It's free, and you're on your way. There is training available for that. You can get that either online from the tax.newmexico.gov, or they even have periodically a YouTube training session. It's not all the time, but it's available periodically, and you can use that particular URL to get that. The EIN, as I mentioned, if you're just one member and you don't have employees, you really don't have to have it if you have, unless you have employees. If you have employees, you have to have it. It's easy to get, irs.gov, no filing fee. Accounting. You say, wait a minute, what's involved in accounting? And why in the dickens do I need it in the first place? Well, the major reason that you need an accounting system is you have to have a way of keeping score. You wouldn't play a football game without a scoreboard. And you got to be able to know where you stand, not only to manage the business, but also how much taxes you owe. And people will want their taxes based on your books. And so you have to keep a set of books in that process. There's lots of ways to do this. The old method of throwing all the receipts in a shoebox and giving it to an accountant to figure out is expensive for you because the accountant is not free. So the more you can do, the less the accountant does, the less expensive it is for you. You can do it a lot of different ways. You can do it on a spreadsheet, just an Excel spreadsheet that says that, hey, I will just keep it on that spreadsheet and keep my records on that way. Nothing wrong with that to begin with. Recommendation you consider is a software. QuickBooks is a standard kind of thing, but that they're not alone. There are lots of different forms. QuickBooks is now available online. You can get it on the web and download it and put in your records. What we used to do, and when we were in business, is we kept our records on the equivalent of QuickBooks at that time. And then we just printed out, or correction, dropped in a disk, downloaded to the disk all the information, took the disk to the accountant, and the accountant did our taxes for us. So we split that, and then that held down our costs as far as the accountant is concerned. To begin with, you need something called a chart of accounts. What in the world is a chart of accounts? A chart of accounts is no more than the boxes that you're keeping track of. So you could have, for example, just one box, and all the money that came in just gets dropped into one box called revenue. On the other hand, if you're running product and service, you may say, well, I want to have two boxes, one for product and one for service. So I know how much I'm making from service, how much I'm making from product. In our case, we had multiple lines of products. So we had multiple boxes for alarm systems, for video systems, for access systems, access control systems. So we could keep track of how much money was coming in for the various kinds of products. You have to decide how many boxes you want, and you can do that with an accountant. There are standard sets of boxes, and the accountant has these. You can get them online yourself if you want. They're just a standard set, and then you can start modifying that to tweak it to what you want to your business. Remember, when you make a chocolate rebel cake, you start out with chocolate and vanilla, and they're separated. But once you mix them, you're going to have a devil of a time trying to separate them back out again. So think about what boxes you need, because it's tough to separate those boxes out later on. So start with thinking about it ahead of time. When we started, before we even started the business, we sat down with the accountant and said, okay, what do we need? And let's talk about that. And we created our chart of accounts, and then we were on our way. There are revenues and expenses, what's coming in and what's going out, and what's left over is either profit or loss. If your revenues obviously are greater than your expense, it's called a profit. If your expense is greater than your revenue, it's called a loss. Most businesses start out with losses, but eventually build the business to the point where you're making profits. Because if you're not, you're going to have a lot of money to cover all those losses. And we're going to talk about that in just a little bit. Make sure you arrange for credit cards. Have a merchant account with a credit card that you'll accept credit cards from your customers, because cash and checks are going the way of the dinosaurs. More and more of it is digital, more of it is online. I'm not suggesting you have to accept cryptocurrency, but credit cards, yes. Let's talk about the way you keep track of things. Here is a simplified income statement. There's two major documents. One's called an income statement or profit and loss. They're the very same thing. P&L, profit and loss, income statement, all the same. It's a record of what's coming in, revenue, what's going out, expenses, and is there any leftover, called profit. These are additional expenses beyond that operating profit to come down to your bottom line profit or your net income. The income statement always covers a period of time. This example just covers a period of years. This could be in weeks, months, quarters, whatever you want to keep track of on your particular account. And if you have software, you can do this very easily by the software will put all the information into the various accounts and will generate your income statement for you. But you want to manage your company. You're going to have to use it for taxes anyhow. But manage your company in terms of, am I making a profit? Where is my money not coming in? And where is my money going out that I shouldn't be going out, et cetera? And how can you control this? Because the more money you can bring in and the less money that goes out, obviously the profit is greater. Think of this as a barrel, liquid in the barrel, and liquid in the barrel is the amount of money level. So to begin with, you're going to put money into the business, and that creates a level of liquid money in the barrel. And as money flows in through revenue, it raises. As money goes out in expenses, it drops. And as if the level in the barrel is dropping, you know that you're in losses. And if the level in the barrel is going up, you know you have profits. But you never, never, never want to run out of liquid in that barrel, because if you run out of liquid in that barrel, and this is all related to cash flow, which you've heard about, cash is king. If you run out of cash, that barrel runs dry, you are dead. You're out of business. Same way your body has blood in it. If you run out of blood in your system, your body is dead. You run out of cash in your business is dead. Never run out of cash. Here's a balance sheet. That's the second major document that your business will have out of either your software or your accountant can generate for you. And it's for a point in time, remember the income statement was based on a period of time. This is a point in time. So this is December 31st, and you can pick at whatever point. And it's what you own, assets, what you owe, liabilities, and then the equity, which is the leftover. So the formula is assets minus liabilities equals equity. So whatever you have in the way of assets here minus the liabilities here is what you have in the way of equity, which is this set right in here. So they call this a balance sheet because the assets on one side, the 472,100, have to equal liabilities plus equity on the other side, 472,100. It's called a balance sheet. Okay, let's talk about budgeting. How do I know how much money I'm going to have? Well, what you do is you project how much money is going to come in. You project how much in the way of costs, and you can then figure out my profits and losses. You say, how in the world am I ever going to figure that out? Well, what you do is you're making some guesstimates on all of these things. And as you start getting information, you're constantly updating this with real information and better guesses as you're going along. And then you'll see what your profits and loss are. Let me show you an example, because you need to figure out how am I going to figure out how much money I need. Let me show you the form. Here's just a sample income statement. Remember, we talked about income statement covering a period from A to B. So here's our revenues, just examples. Here's our expenses, money coming in, money going out, and profit and loss. So for the first month, I don't get any revenue in because I'm doing work for people. I've got some labor expenses, utilities, etc. So my total expenses are $130. So 0 minus 130 means I'm $130 short. So that means I've had to have $130 or else I couldn't even operate that month. Second month, I got $100 in, but I had $160 going out. So that's an extra 60 on top of the 130. So that means to begin with, I had to have $190 or I would run out of money. So you never want to run out of money after you start a company. You always want to look ahead and figure out how much money am I going to need to get this company started. And in reality, most of this is going to be just a guesstimate on your part, and you're going to guess your expenses too low and you're going to guess your revenues too high. I helped a son-in-law start a business in Denver. And I asked him after he got the business started, I says, how was that? I says, he says, yep, I overestimated revenue and I underestimated my expenses. And I says, about double. And he says, it wasn't quite double, but almost. So make sure that these numbers here, you have some flexibility in when you generate your draft income statement or your budget. Third month here, we've got 200 in, and it was only 180 in expenses. So I got 20 to the good. I had a $20 profit for that month. Against this 190, that brought that down to 170. 300 minus 220, I got $80 of profit. That brought that 170 down to 90. And here at 400, I had 150. So against that, I had a profit of $60. So I'm at break even in here. In other words, I've got all my money recovered. So I had the net break even back here to where I had a little bit of profit in the third month. So I had break even at this point. And here I have net break even. In other words, I've recovered all my money that I had put into the company in this example. But you want to get to break even back in here as soon as possible, because otherwise these numbers get to be pretty big. And that means that you've had to have that money in your pocket, because if you didn't have it in your pocket, you can't pay your bills. And again, can't pay your bills, you're out of business. Where am I going to get that money? Well, it turns out that the Inc. magazine, INC, which is a magazine for small business, around a long time, put in the Inc. 500. And this is the 500 fastest growing businesses. And last month, they just put out an issue that had the Inc. 5000. In other words, the 5,000 fastest growing businesses. And this question was asked of the CEOs in both cases, and both cases came out about the same. Where did you get your money to start with? And by far, far, far the majority of all of those fastest growing businesses got their money from savings, friends, and family. And the friends and family, you could get it from them in terms of a loan or you could sell equity to them. Particularly if you're a subchapter S, you can sell them the shares in the business. If you start a subchapter S, make sure that you start out with a huge number of shares, like 1 million shares or 10 million shares. Give yourself a certain number and then leave the rest of them in what's called treasury stock inside the company. You still own 100% of the company. So for example, if you started out with 1 million shares and you issued yourself 200,000, you say, wait a minute, that's only 20% of the shares. Yeah, but that's 100% of the issued shares. So you still own 100% of the company. Now, if you turn around and you say, okay, now I'm going to sell another 100,000 shares, and you've only issued yourself 200,000, that means that there's issued 300,000 and a third of them you've sold. So somebody else owns a third of the business and you own 2/3 of the business. As soon as somebody else owns 51% of the business, they have the option of replacing you as CEO. And by that point, you'll have a board of directors, and the board of directors can say, hey, you're not helping the company, you're fired. Well, you say, wait a minute, I'm the one that started the company. Tough, you don't own a majority of the shares. So you have to be careful in how you work that sale of shares. And some people say, I'll never sell a share. On the other hand, you want to say, hey, I don't want to limit my growth. If I can increase my growth rapidly, it's better to have a part of a big pie than a whole very small pie. So you have to make those decisions as you're going along. There are other forms of funding. Crowdfunding is one of them. Crowdfunding is an arrangement whereby other people believe in you and are willing to provide you money. The forms of crowdfunding are a gift type of arrangement. In other words, you can start up a crowdfund and say, I'm going to give me, because you believe in my business. And this is particularly true if you are a business that has a strong social orientation. They may believe in it and they will give you the money, and they'll say, saying, fine, I'm going to give you a t-shirt, or I'm going to give you a sample of the product or whatever. And that's basically just a gift to you for money. The option also that is more recent is you can sell shares of the company through crowdfunding. Very complicated operation, but it can be done. All of these have to be done with an intermediary. An intermediary is somebody like Kickstarter, Indiegogo, things of that sort. And those companies will help you set that up. They get a fee for that, and they may end up getting a percentage of the money collected. And also they may have a provision that says, if, for example, you say, I want to raise $50,000. If you don't raise the 50,000, say you raise 45,000, you have to give that 45,000 back. In other words, if you don't hit your goal, all bets are off. You still have to pay them their fee, and you have to give all that money back if you don't hit. So make sure you take a look at the organization in terms of how they operate, as the Kickstarter, Indiegogo, or others that you're going to operate with. As I mentioned, you can also sell equity. Equity is just shares of stock. So if you were a subchapter S and your doctor, dentist, or lawyer, or somebody who has extra money and says, you're really doing a great job here, I'd like to have a piece of action. And you say, great, I'm going to sell you 10% of the company for X. Nothing wrong with that, as long as you're a subchapter S or C corp. You can get loans. Now, the problem is people say, well, I'm just going to go to the bank and get a loan. Banks are not interested in providing a loan to startups. They're too risky. In fact, there's all sorts of figures that I've seen. 80% of small businesses are out of business within 5 years. I've heard 90% of businesses are out of business in 5 years. And somebody says 90% is too conservative. It's even higher than that. So banks are not going to loan you. The only money banks will loan you is on your personal collateral. Like, hey, I've got equity in my house or my car, or I've got stock or whatever. They'll take the equity. In other words, if you can't make your loan, they'll just grab your equity, and that becomes the payment on the loan. They'll do that. But again, that's a personal loan. And then what you do with the money is up to you, putting it in the company. In our business, we had a period where we had to expand and I had to have money. So I actually took out a second mortgage on our house because we had equity in the house, and used that money for the business, and then had the business pay me and payments, and we paid off that second loan on the house. But there's a lot of different ways of getting money, but the primary on starting a business is savings, friends and family, internal amount of money. Let's put it all together. You've heard about the operating side of things through the business model canvas. You've heard of a lot of administrative things that we've talked about that need to be done. How do I put it all together? Well, the way you do that is you sit down and you start writing out all the steps. First thing I need to do is X. Second thing I need to do is Y. Third is Z. And what you're doing is you're listing these chronologically. And you can do this by saying, what do I have to do? Who's responsible for it? When does it have to be done? And how much is it going to cost? And you're constantly updating that list. Well, one way to do that is just use a simple Excel spreadsheet and put down the various steps, who's responsible for it in here. Am I going to do it, or is my brother-in-law or who's somebody, my lawyer or my accountant, whatever is going to take care of that? When is it going to start? When's it completed? It's supposed to be completed. And when is it actually completed? You can do these, or you can just have a single date. How much it cost? You can have notes over here. For example, you could say, I'm going to put priorities. So number 1, 3, and 5 are the highest priorities. I got to get those done. And 2 and 4, if I don't get them done, it's not a crisis. So you can prioritize these as well. But make sure you put down a schedule of events. And you say, well, I know it's all in my head. The problem is you tend to forget it. And you forget, oh my gosh, I forgot I got to put this additional one in. And you'll be thinking of things, oh, this has got to go between 3 and 4 or between 4 and 5. Put it down and then you'll know, and keep track as you're going along. Let's talk about the basis for success. You got to understand your customer's problem. That's number 1. Key. Because the only way you're going to succeed in business is satisfying customer problems that they're willing to pay for. So you're going to come up with the solutions, and they have to get more value than what you get. In other words, they say, man, I just got to have this, and it's worth the $15 or $115 or whatever it is that I have to pay for it because it really is taking care of me. What you want is an increasing number of overjoyed customers. The more overjoyed customers you have, the more successful your business is going to be. Why? Because there's lots of forms of marketing. I mean, you can do marketing in a million different ways. But every time I've asked people in business, successful people, what's the most successful form of marketing? They all come back to me, word of mouth. If I have overjoyed customers, they're going to tell X number of people. But if I have customers that are really ticked at me, they're going to tell 2X or 3X number of people. People complain a lot more than they praise. So if you leave customers unhappy, they're going to go out there and spread the word, don't go to this company. They're terrible. You're going to have a real problem. But if you have overjoyed customers and lots of them, you're guaranteed success in business. Specifically, you have to have passion and commitment. If you remember on when we did the business model canvas, number 13, lower right-hand corner, why are you in business? If you know why you're in business, you're going to have a strong passion, and you're going to be able to withstand all the bumps in the road that come along that are trying to derail you and knock you off. You have to have a service that I mentioned that customers will pay for. You have to have your vision or goals. Where am I going? In other words, I want to score touchdowns. How am I going to score touchdowns? Am I going to do runs? Am I going to do passes? Am I going to mix them? What kind of passes am I going to have? You have your goals and your action plans of how you're going to do that. And you have to be persistent. If you're not persistent, it's just not going to happen. You got to deliver on all your promises, because if you don't deliver on the promises, people are going to say, hey, that's a bum company. I'm not going back there again. You got to you follow the legal requirements, and you can cut corners. There's no question. I've told a lot of people, say, well, I'm not going to do that. I'm not going to pay my taxes or groceries. Not a problem in the short run. In the long run, if you build your business very big, I mean, in terms of any size, they're coming after you. And when they come after you, it's going to cost you dearly. In other words, they're going to not only say you owe all the money you didn't pay, you're now going to be fined, and you have to pay interest on the money that you didn't give us. So it turns out to be, if you owed them, originally $100, it's going to cost you $200 or a lot more, particularly when you finish up with your legal expenses when they drag you into court. You have to be willing to start the business. Say, yep, I'm willing. Quick story. 5 frogs sitting on a log. And 3 of the 5 frogs decided to jump in the pond. How many are left? Well, the logical mathematical thing is 5 minus. Well, there's 2 left. Actually, there's 5 left because 3 of them decided to jump, but they didn't jump. You have to be not only willing to jump, but you actually have to jump. You cannot learn to swim until you get in the water. And that's risky, but you have to be prepared. And that's why we're going through these things on preparing you for successful planning and for successful implementation. Ultimate tests, timing. If you have timing into the marketplace, you're in great shape. There's a study that was done, this outfit, and they did all sorts of things, whether it was the team, whether it was the funding, whatever, timing. They just hit the market at the right time. So Facebook came in at the right time. Google came in at the right time. Amazon came in at the right time when there was a need. And when there's a need, they filled it and they were successful. Sure, you have adequate capital. We went through that in terms of startup, but growth capital as well. Once you're started and you're successful and you have profitability, you're going to have a lot easier time going to the bank because they're going to say, hey, the risk is reduced. I can see you're a growing company. I'm willing to loan money to you. Big area, you'd say, I'm uncertain about this thing. Be sure you talk to your counselors and mentors on that program, but you've got to be able to do it. You got to jump and you got to make it started now. So we're going to get to questions and any questions you've got, be sure you input those. But while we're talking about questions, I want to talk to you about resource partners. SCORE is one. I'm a member of that. There's besides the SBDC, who's providing all of this information to you, Small Business Development Centers. There's WEST, the Women's Business Center program, and they're not only for women, but also for men now, and a Veterans Business Outreach Center, VBOC. If you're a veteran, make sure you talk to Rich Koffel. They're great programs over there. So with that, I'll turn it back to Leslie and ask you to see if there are questions and see if you want to finish up.
Well, I love your story about the frogs, and I think that's great because, you know, you have to be willing to start. Would you mind bringing up the last slide before questions? Let's look at that. Okay, so I think what they're wanting is the resources. I'm going to be sending you a copy of the presentation. It'll have all the links and everything. So don't worry about having to write it down. We're going to send that to you. It should go out today. If not today, it'll go out first thing in the morning. So that way you'll have all the resources you need. And again, nmsbdc.org is has the no cost confidential counseling. We have 19 centers. So we have one pretty much anywhere. I'm not going to say anywhere, New Mexico's a big state, but we have one pretty close to you, and we'll be glad to connect you with your local center. So grateful for your time and knowledge today is what we got in. So again,
good.
Thanks so much, Vic. We
You're
always
welcome.
Appreciate it. I want to remind everyone that this is a 2-part series. You can jump in on the second part or the first part. It always leads into each other. And that's why I like it. So if you have questions, come back to the next one and we will make sure that your questions get answered. And with all that, Vic, thanks so much. We'll see you next time. You guys have a great rest of your week.
Super. Thanks for coming in. Bye now.
Bye.